Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, October 31st, 5:48 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market given a trick, not a treat, to investors today. State of the market, we're in an uptrend, but weakening after a changing character day today. Set the trend gauge over here, two downgrades. First in market leaders, absolutely slammed today. Most of them, 19 of our 21 over 21 leaders list down on the day, and about a third of them breaking the 21-day moving average. I don't need to be hit over the head with a two by four twice to know that that is uh, a shift in market strength from growth mode to neutral. And how we respond tomorrow and early next week will be key in determining the next move for our portfolios, as we'll take our cues from the market. Also being downgraded from growth to neutral is the short-term trend, as all five of the major indexes are below their 21-day moving average. Dow with five or six closes below that level now. And in fact, the Dow pierced the 50-day moving average, and small caps did the same thing. So still on the green arrow there, as the majority are above there, but the yellow sub arrow signaling the cautionary tail. We really need to hold here on the Nasdaq 100 and the S&P 500 at this key 50-day moving average, which is our medium-term trend indicator. Long-term trend, we're still above the 200-day moving average. Market never gets into serious trouble unless we break below that level. Last night, I was fortunate enough to be a guest on the Investing with IBD podcast, and the title of the interview was Smoothing the Curve, which is what we talk about every night here in our videos. And we dove in depth into the process we use at Revere and a lot of the stats behind the process. Check it out, and I'd love to hear your feedback on that. Just go to YouTube and search for Investing with IBD podcast, and you should be able to find it quite easy. I'd appreciate it if you check that out. And let's get more into it now. So, uh, here are the numbers on the day. Big tech and growth leaders slammed. 21 over 21 list down 3.2% on average, only two up, 19 down. Big eight also slammed. The uh, main driver of the weakness was poor earnings reaction to Microsoft and Meta that carried over to Nvidia, and just no respite from sell-off during the day in these big names, and that trickled over to growth leaders, as I said. Uh, that's the big eight down 3.13%. The RG8s, our eight growth ETF composite, down 2.13%. S&P 500 gap down three quarters of a percent, put in the high. When your high after gapping down happens in the first 5 minutes, that's not a good sign. Trickled lower for most of the morning, tried to base and bounce a little bit, but ended up rolling over late, closing near the low of the day. S&P down 1.9%. Equal weight, slightly better, down 1.1%. In fact, it was quite a bit better for most of the day, but this sold off late in the day as well, as it indicated more rotation than sell off, but late in the day, there were investors heading for the exits. NASDAQ 100 down 2.52%, equal weight down 1.55. Dow Jones Industrial Average down 9 tenths, mid caps down 1.3, Russell 2000 down 1.6, Global Diversified 60/40 stock and bond down 0.92%. Bonds essentially flat helped this number. And our flagship portfolio, GROTECTION, down 2.4%. Let's get into the charts and the numbers, and we'll start with the S&P 500. Last night on the interview, echoing what we've been saying in these videos for a while, and that was this key breakout level here that we needed to hold. In fact, that one of the questions, it was on YouTube Live. One of the questions was, what would make me change my opinion? And I said breaking this 16-day, the bottom of this 16-day consolidation level, and that's exactly what happened at the open today. No bounce whatsoever. So now we're down into this next level, 5670 ish, and that'll be a key level for support. The 21 day, or sorry, the 50-day moving average is right around here, that 5700 level. So it's in the middle of this. So we do have some support around here if the market decides that that's enough. And of course, we've got tomorrow morning, we've got the non-farm payroll report. We'll talk a little bit about the earnings reactions to Amazon and Apple, which occurred after hours today. And of course, the election next Tuesday. So that's a 60-minute chart. Back to the daily chart, breaking the 21 decisively and the slope of the 21 rolling over by our rules. We lightened up on our index positions and we got stopped on several of our individual name positions, some being taken out completely, some just trimming. So there's the S&P 500 next to the NASDAQ 100, which had been showing relative strength until today. That certainly changed. Clear break of the 21, holding the 50-day as of right now and up 0.22%. Not much after hours, as Amazon appears to be acting positively to earnings while Apple is down slightly. That's the NASDAQ 100 next to the Dow Jones Industrial Average. You can see how the 21-day rolled over here a week ago, now breaking the 50-day moving average and this big 42,000 support level. On to mid caps. Also decisively breaking the 21 today, holding at the 50-day moving average, and this is a failed breakout for this also. So now back into the support level from late September, early October. The Russell 2000 small caps closing just below that 2200 level and the 50-day moving average, breaking the 21-day moving average. Also, obviously, a failed breakout here. You can see yesterday we tried to rally back into that breakout level and couldn't make it. So we had a failed breakout level here in July. We tried it again in October and failed. And now we're breaking that 2200 support level, and rising interest rates probably having quite a bit to do with this. Let's look at the equal weight S&P 500, which had been underperforming. You can see the relative strength line here. Also talked about that on the podcast. That peaked in September, trickling back up now, but also breaking the 50-day moving average and below the 21-day, and the slope of the 21-day has rolled over on that as well. So those are the major indexes. Let's go to the VIX. VIX certainly reflected the fear that seemed to be in the markets today, as it was up 13.8%, closing at above that 23 level. This is where it has peaked twice going back to September. So we'll keep an eye on that. This is elevated. We don't want to see this. And also, after the 2 days, the ATR, the S&P 500, has started to tick up as well. That's not the direction we want to see it going in either. Let's look at the US dollar, which is now basing after a strong up move, basically about a little over a week of a base here. So keep an eye on what happens with the dollar. This 104 was the breakout level. We pierced back below that today. Keep an eye on this. But despite the dollar being weak, precious metals got hammered today. We'll start with silver down 3%, breaking the 21-day moving average and right back to the pivot. Gold, GLD, not bad, down 1.55%, just sitting on the 8-day moving average. Can't really complain about that. It's been showing serious relative strength over the last 3 weeks. GDX, gold stocks, however, after a big break last week and a failed breakout, breaking recent support and bouncing at the 50-day moving average. Today's low critical for that, down 2.8% on the day. Bitcoin, right to the top of this breakout level 2 days ago, inside day yesterday, pulling back today, trying to fill the gap here around that 40 level, down 2.7%. Let's move on to bonds. Bond prices kind of consolidating just like the dollar now in about a 2 week range. That's BND, the broad bond index, TLT, same thing. That's the long bond. So after a move up in rates, we've got a little bit of a consolidation going on here now, still holding the breakout level. This is the 30-year, the 10-year TNX, closer to the top of the range than the 30-year is, but still consolidating for about a week and a half now. So those are the major indexes. Let's get to the tail of the tape. Decidedly negative on the stochastics now on the five major indexes. The RG8, the NASI RSI has rolled over, dollar strong, but consolidating. TNX and TYX strong, but consolidating. You can see the big tick up, and now colored in red is the VIX. On the other hand, fear and greed index has come down quickly. We keep it in yellow because unless you get to one of the extreme levels, extreme fear is actually bullish, extreme greed is actually bearish. The three in the middle, fear, neutral, and green, yellow colored, which is kind of neutral. So the bull case, first break of that today since the 9/11 move higher. Bear case, will we get multiple closes below the 21 day? And will we close the week below it? If so, that'll put the bear case intact, as we'll be firmly below the 21. News, as I said, Microsoft and Meta hit big tech after hours. Apple slightly down, Amazon up a few percent, and long-term rates going sideways. Sorry, I jumped ahead. Friday morning, we've got the non-farm payroll report. So the keys today, two of them broken. This range, 50, breaking to the downside of this S&P 500 range. Same thing with the NASDAQ 100 range. Long-term rates consolidating. So our day count, after 16-day consolidation, we're now breaking that, and our day count is 1 day down. Second day down on the 8 EMA, and breaking this nice 35-day uptrend on the 21-day moving average, as we're a -1 there, and the red arrow indicating that the slope of that line has rolled over as well. This takes our expectations from positive to negative, which is where they'll stay. This is really a short-term expectation. As long as the S&P and the NASDAQ 100 stay below the 21, we'll be backing off the gas. You can see the break of the levels here versus the 21. Action, I didn't fill this out, but we did close at the low of the day after putting in high at the opening tick. We sold off in the AM, tried to rally, and it rolled over late in the day. So certainly not what you want to see after, but maybe just time to wear things to wear out some of the bullishness in the market. Although, we had been saying when you're in a 16-day consolidation, that's not very bullish, but leaders had been acting well. And that certainly is what we saw change today. Sectors, only two positive: energy, utilities. From the spider sectors, solar also positive, bonds mix, dollar slightly down. 9 of the 11 spider sectors to the downside, led by tech, XLK. Semiconductors and software also hit hard. Gold and silver stocks also hit hard. So portfolio changes. Stopped on our SSO position, the 21-day moving average break, made that decision for us, and also stopped with small losses on CCJ and COHR. We trimmed a portion of CEG, and we added some things that are working, Reddit and MSTR. We'll take a look at those charts, and I'll explain why we did those. Bottom line, big tech and growth leaders slammed all the indexes below the 21-day moving average. That's a change in character. For the keys going into Friday, we want to watch the S&P and the NASDAQ 100 against their 50-day moving average, and also see if there's any impact to long-term rates and or the indexes by the non-farm payroll report tomorrow. A couple of You can see the key levels here as today broke below the 21 and this recent breakout range. Added a big support level here. If we break the 50-day moving average, the next level down will be the September breakout level, which was 56.52 to 56.70. We're consolidated a little bit there before breaking out. Let's go and take a look at that on the S&P 500. And here is what I'm talking about. This level right here. That's where we topped in July. We topped in August. We finally broke out in September. We tested it late September. Still above there, but right below the 50-day moving average is that level. So two key support levels right on top of each other. And that's what we will be keeping an eye on. So, as I said, bottom line on the day, all indexes below the 21-day moving average. Let's take a look at some charts. And we'll start off with what we added to today. This is one of the techniques that we use is something that we're in, MSTR MicroStrategy. Again, this is the quote unquote leverage play on Bitcoin. It initially sold off after earnings, recovered after hours, and the low of the range of the earnings day serves as a good stop out level. So we added a little bit to this and stop 2% below this 8-day moving average, or 2% below the low of today's bar. Basically, this said after selling out down toward here, uh, they announced they're buying more Bitcoin, issuing debt to buy more Bitcoin, and the market reacted somewhat favorably to it, down 1%. It was up for quite a bit of the day, despite Bitcoin being lower. You can see the relative strength on here, this clearly being a leader. Good risk to reward on that. The other buy that we did today on Reddit, making a day two higher high, showing extreme strength. And you can trade that against the low of today and the high volume close from the breakout level, but just massive volume yesterday, very strong volume again today. Anything that's up 2.8% on a carnage day like this was in the market. They're very good earnings report and reaction to the earnings report. Good growth levels going forward. You got your accumulation distribution. They're making money. Lot of good to say about it. So let's take a look at the other changes that we made today. CCJ got stopped for a small loss on this as it broke the 21. Ideally, the buy point would have been back around here at 50, but less than 0.1% hit to the overall portfolio. We never added to our initial 2% buy on that. Same thing with COHR. We bought it, a leading stock on a downgrade. It consolidated nicely, looked like it was set up along the 21 for higher prices. No such luck. So stop on that, less than a 10% impact to the overall portfolio as well. And we trimmed CEG up on the day. But when the market's selling off like this, we take a look at all of our holdings. What recent buys are we red on? This was one of them. And we cut half of it, again, less than 0.1% hit to the portfolio on this. Low single digits on all these three stops, and it did reclaim the 21-day by the end of the day. It does have earnings next week, certainly in a positive sector. What else do we want to look at today? How about some positive earnings reactions? Here's Twilio. Big gap up, former leader, uh, big gap up, and another software stock that's gapping up after hours is Atlassian, ticker TEAM, up 16% after forming a pretty nice handle here over the last 3 weeks. Um, Other earnings reports. So let's take a look at Amazon's after hours. It's up 6% now, so the conference call must be going pretty well. Let's look at Apple. It's down 2% on earnings. Let's look at the NASDAQ 100, up 1/3% headed into tomorrow. Those two having a big impact on it. We need the big eight to cooperate as they have such a big impact on the indexes. Let's take a look at another winner, Sprouts. This is a 21 over 21 name, up 8% on earnings. Let's take a look at some that got hit hard today in the 21 over 21 list. Shark Ninja on earnings, breaking the 50-day. This will come off of the list and be replaced with Reddit when we calc the stats for tomorrow. Also to the downside, SMR, small nuclear reactor, but uh, new scale power, but that's just a pullback after a nice move. Deckers initially gapped up on earnings, breaking the low of that earnings day is not positive. Chart still, you got to take it in context of what today's action was also. This still looks okay. Looks like it's sitting right on the 21-day moving average. We already talked about Coherent, Palantir breaking the 21. This is a leader. Maybe it pulls back to the 50-day and gives an opportunity to get in. NVIDIA had a rough day also, breaking below the 21. A Lab sitting on the 8, and Oracle, which we sold last week because of relative weakness, breaking the 21-day today as well. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. Reminder, as I went into detail last night on our flagship portfolio, GROTECTION, designed to grow assets during uptrends and protect them during downtrends. This is the first sign of weakness today. We've had several signs of weakness throughout this year. April, we did a little bit of selling, even less selling in May, as it was just a 1 day undercut and reclaim of the 21. We did some selling here in July. We did some selling here in September. But each time the market righted itself and our rules got us back in. We've got really nice gains over the past year, and we're not going to give them back. We'll keep 85 plus percent, about 82-ish% of those gains should we go all the way down and break the 200-day moving average. This is where all bear markets occur, and we might get stopped out of all of our individual positions on the way down to this, but we'll keep part of our core position in the S&P until we break that level, and then we'll either blow it all out or start hedging it. And with that, I'll wrap it for Thursday, October 31st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.